looks like I'm live. Sweet. Welcome back. This is Game Trader Live for February 28th, 2025. We're 2 months into the year. So we're going to look at some monthly stock charts. We're going to look for some signals. But also, we have a lot of earnings that we can kind of dive into. NVIDIA reported this week. So we're going to do a little bit of both here. We're going to do a little fundamental analysis and some technical analysis. And as always, I'm going to start with a look at the broader markets, and then we'll hit some individual stocks that I think are important. And if we have time at the end, anyone here in the live stream chat can ask questions about whatever they're interested in, and I'll do my best to answer them. If I don't know the company off the top of my head, I may have to address it in a future episode or something. But yeah, what do you guys say? Want to look at some charts? Here we go. Look at me, I got a little box here. I'm a box. It's neat. So I'm not covering up as much as the chart software as I was last episode. So yeah, we're looking at the S&P 500 here. This was almost a do-nothing month. It opened the month at 592.66 cents. It closed at 593.81 cents. Now, in the interim, it did hit an all-time high of 613.23. So I'm looking at the SPY. We can look at the S&P 500. It's the same thing. It's just one's an ETF and one's a index that the ETF represents. But you can trade options. You can trade futures contracts on the S&P 500 as well. So yeah. Anyway. The all-time high of the S&P 500 was reached earlier this month. It was 61.47 cents. So what we had was an outside month in January, followed by a breakout above it, only to come back inside. So we're looking at a very much a do-nothing kind of a month. Like, it went up, it went down. It did not stay inside of that previous range, so it did break out to the upside only to fail. So that's something for us to pay attention to. It did not, we did not see continuation of this breakout. And let's zoom out just so people understand what we're dealing with here. This is a vicious bull market that has been going on. You could argue it's been going on since 2009, or if you want to say it started in 2020, you could do that too. But either way, there's a defined uptrend. It's been hard to fight this if you're a short or you're a bear. But yeah, S&P 500... this is the quarterly chart. It's going to look kind of... It's basically a merger of those two monthly charts. We'll look at quarterly charts next episode. So on March 31st, which would be... March 31st is a Monday. Ew. I have to stream on a Monday? Ugh. Anyway. Yeah, we'll look at the quarterly charts then, because there's still a month left in the quarter. But yeah, I don't see a whole lot on the signal side here. All we know is that the S&P did not stay inside year. It did break out above last year's high. But we're back inside of that range now, so just keep your eyes on it. If we're talking intraday today, let's look at the 15-minute chart. Right here is about where Donald Trump used the word World War III when talking to the president of Ukraine. And yeah, the market sold off for about an hour after that, only to rally into the close. So I don't know why we rallied into the close, but we did. We'll see if that carries over the weekend and you know, in international markets on Sunday or whatever. We'll have to keep an eye on it. But yeah, I guess after the bots all reacted to the words World War III, everyone realized that we're not at World War III yet. So maybe it was premature to sell all your stocks. But I was talking to our community manager, Denny, about this. I'm not sure if anyone remembers Roaring Kitty, Keith Gill's stream last year, where he was messing with the algorithmic traders. every time he said, I'm going to end the stream, the GME stock would sell off and halt. He did it like 3 times during it. So it's something that people might not realize, but these trading algorithms on Wall Street are paying attention to keywords, and they're paying attention to trends, and sometimes they may even be watching a live stream or something and reacting to it. So, or the traders who program them are. Either way, the market recovered into the close, which was kind of surprising given it was a rough week overall. S&P was right on the week, but didn't close on the lows. Definitely bounced back. So we'll see what happens. Let's look at the other indices. Do I not even have it here? I care so little about the Dow Jones that I don't even have it on my watch list. So yeah, here's the Dow. Actually green on the week, which is surprising. We have an inside month in the Dow Jones. That's interesting. So we're going to have a sell signal below 431 and 2 cents on the DIA. This is the ETF for the Dow Jones 30. And you would have a buy signal above 449 and 73 cents. So there's a risk range to pay attention to. And that would be useful information for the next month. There's a reason we do this at the end of the month. Because if I try to give you monthly signals without the month being complete, things could change. So this day, the last day of the month after the market closes, it's when these monthly charts are most valuable to look at. So that's why I do this an episode at the end of the trading month, and it's not like the 4th Friday or something. It's like always the last trading day of the month. And I also did that for the year. So New Year's Eve, we did a little stream. My green tea is that perfect temperature, you guys. I love it. And it's just like, it smells good, tastes good, soothing. Anyway, so yeah, you got an inside month in the Dow Jones, the diamonds, as some will call it. It's also trading inside quarter, so it's something to pay attention to. If it stays within that, we'll have something to talk about on the March episode. It's also trading inside year. So while the S&P 500 did hit a new all-time high, the Dow Jones did not. And if you ask yourself why, the S&P 500 is like 500 companies. The Dow Jones really is 30 companies. So if you look at the components, they've been struggling. Nvidia did hit an all-time high earlier this year, but it's come back a lot. Apple hasn't really seemed to get out of its way, its own way. Actually, let me see. What are the Dow Jones stocks? The Dow Jones is 30 stocks. I just want to see what they are. So yeah, Amazon, American Express, Amgen, Apple, Boeing, Caterpillar, Cisco Systems, Chevron, Goldman Sachs, Home Depot, Honeywell, IBM, Johnson & Johnson, Coca-Cola, JP Morgan and Chase, McDonald's, 3M, Merck & Company, Microsoft, Nike, Procter & Gamble, Sherwin-Williams, Travelers Insurance, United Health Group, Salesforce, Nvidia, Verizon, Visa, Walmart, and the Walt Disney Corporation. So it's like, when everyone's like, oh man, this is, never thought that way about stocks. What do you mean? Welcome to the chat. But I don't know what you're talking about. Anyway, yeah, the Dow, that's the Dow 30, in case anyone was wondering. So yeah, it's trading inside year still. Did not hit an all-time high. The all-time high for the Diamond ETF is 451.55. We closed this month at 438.30. So still well inside last year's range. We'll see what happens on that front. I mentioned it's inside quarter. It's inside month. It was actually green on the week, green on the day. There might be some exhaustion to some of the sell-off here. It's hard to say. I mean, it depends how you feel about the global political situations that we're in right now, because they are going to affect equity prices, and they did earlier today. Let's see. Let's look at the Qs. The NASDAQ 100. Well. NASDAQ 100 looks a lot like the S&P 500. Oh. Never thought that way about stocks. Oh, no, I love green tea. It's the perfect temperature. I also like smelling green tea. Just like shove your nose in the cup. It's delightful. It's not even that cold outside, but you know, I love hot tea. I'll drink hot tea when it's like 100 degrees outside. Anyway, back to the NASDAQ. Red on the year, did not stay inside year, is not inside quarter. This is a ETF that represents the 100 largest companies in the NASDAQ. The all-time high is 540.81. We're currently at 508. So it did hit a new high this year. That's an outside month. So we have a risk range to pay attention to here. A breakout above that all-time high of 540.81 would be a buy signal, but we're definitely closer to the lows here. So a breakdown below 496.93 would be a sell signal, and that would be valid through the entire month of March. So you're going to want to pay attention to that, and I'm sure that if we look at individual components of the NASDAQ 100, we may see similar patterns. That was an ugly week for the Qs, but they did close off of their lows like most of the market did. It was actually green on the day. We saw Nvidia kind of have a reversal today. We'll get into Nvidia here once I start talking about individual stocks. But I want to get into the habit of talking about the broader market when we start the show, and then talking about the components or sector. Yeah, so this is the NASDAQ 100 chart. Green on the day, surprisingly, but red on the week, red on the month, and red on the quarter. But not inside, but we do have an outside month now. So like I said, a break down below 496.93, I think we could really start testing some of these previous lows. And it seems like we might be entering into a different phase of the AI gold rush that we've been witnessing. Let's see, other market to pay attention to, or ETF to pay attention to, is the IWM. This is the Russell 2000. It's small caps. These are smaller companies. I think they tend to look more like I think they tend to be more forward-looking than these other larger indexes because it's small business. We have an outside month here as well. What's interesting, I brought this up last month, you did have a potential rev strat, but then it did not happen. So it would have been above 230.32. We did get to 230.70 during the month, only to come back all the way through this previous bar. So now you have an outside bar, just slightly to the upside, but definitely to the downside as well. So on the IWM, you would be a seller below 210.96, and it would have a buy signal above last month's high of 230.70. So that's kind of interesting there, because now we have the NASDAQ 100 with an outside month and the IWM with an outside month. I don't believe we had that on the SPY. No, we don't. And we don't have that on the diamonds either, the Dow Jones. The Dow Jones, oddly enough, was inside month. So I guess what I'm getting is, like, in the case of the Dow Jones, they're trying to find some sort of equilibrium. But in the case of the NASDAQ and the IWM, the Russell, they're really struggling to find any kind of price equilibrium. Quite the opposite is going on. When you're trading outside of the previous month's range, it means you took out all the buyers and the sellers in the previous month. So we don't really know what's going to happen. We just know that whenever this occurs, there's a new broadening formation created, because it's quite literally the opposite of trying to find price equilibrium. I'm trying to find the last time we had an inside anything on this chart. The last inside month we had for the NASDAQ 100, wow, it was October of 2020. So this thing has not really been able to find price equilibrium on the monthly chart for a while. I think it's had, yeah, same thing on the quarterly chart. And yeah, NASDAQ's down on the year, but I don't know. You want to just look at some of these long-term charts and remind yourself, like, where we are in this cycle, where we're at in this bull market. We're certainly closer to the highs than we are the lows. I think that's safe to say. But yeah. So those are the broader markets. I do want to look at the semiconductor ETF. I think I've said it before, it's inside year, outside quarter, but it's not over yet. But you have an active sell signal on the quarterly chart. So we traded inside quarter to end December, and then we broke down below it during this quarter. So below 234 and 17 cents, you have a quarterly sell signal in the entire semiconductor ETF. Where it's trading below that right now. So this is still valid through the end of March. So you have a month left on this sell signal if it stays down there. And obviously, like, when I say these are your points to enter a trade, they're also your point to put the stop loss at. So if you're shorting this, you're covering it if it gets back above 234.17, because then it's coming back within this range, and we don't want to get chopped up. But yeah, the SMH had an inside followed by an outside quarter, but this quarter's not over yet. But where it closed today, it is still an active sell signal, and you would have 31 calendar days left in that. So yeah, those are like the ETFs and the indexes I wanted to look at. Yeah, let's take a look at these tech companies. So, like, I don't know who coined the term, but Jim Cramer frequently calls these the Magnificent Seven. It's the 7 largest tech companies in the world. Basically, it's Apple, Amazon, Google, Microsoft, Facebook, Tesla, and Nvidia. And what I wanted to do today was maybe rank those companies. I would do it in a way that is fundamentally driven, not how the charts look. But we'll look at the charts first, and then maybe I'll rank these companies. Hey, Lucci. Thanks for joining, dude. We're talking about stonks. I don't know what makes your eyes glaze over more, when I talk about football or when I talk about stonks. But either way, you're here for the stonk show, so God help you. But yeah, Apple, no actual signal on the monthly chart. It traded below the low of last quarter, so I wouldn't really get too crazy there. It's trading inside year. And this is a component in all the indices. It's around the same. Yeah. Yeah, no, look, congratulations to Eagles fans. And I think it's ridiculous that they want to ban the tush push, but I digress. Apple inside year. red on the week. Big ol' stinky outside bar on the week. So next week you would have a buy signal above 250 and a sell signal below 230 and 20 cents. But that's a wide ass range. It could just stay inside of that. Amazon, the big news out of Amazon is they passed Walmart in quarterly revenue for the first time. So they are now the largest retailer in America. And that stock certainly looks like it. No inside quarter. It's not inside year. That means it hit an all-time high earlier this year. Actually, earlier this month when it hit 242 and 52 cents. That's the long-term chart of Amazon if you want to kick yourself. So yeah, we have an outside month in Amazon. So you would be a buyer of Amazon above 242 and 52 cents and a seller below 204 and 16 cents. And that would be a valid sell signal throughout the entire month of March. Yeah, I mean, if you want to look at the Walmart chart, Walmart's doing pretty well too. It hit an all-time high earlier this month, but the news out of that company was not good. So you saw it sell off here in recent weeks. Yeah, this is when earnings came out. So you saw the stock rally into earnings. Then they reported a weaker than expected quarter, and they gave some pretty dour guidance about the future. So, it remains to be seen. Is this like a secular thing where people are just shopping at Walmart less, or is Walmart one of the early signals of a weakening economy? And Walmart's going to feel the pinch of all those tariffs too, because they sell a lot of stuff that's made in China in there. And they're the ones who have to pay that, and then they pass it along to the consumers, and then the consumers have to make a decision if they're going to buy it or not. So we're seeing this play out at a lot of retailers right now and a lot of companies right now. And there's varying degrees of transparency about the effects of tariffs right now, because a lot of them have not gone into effect yet, or they're just now starting to hit. I think a lot of companies also knew that the tariffs were coming when Trump won. So you saw a pull forward of inventory purchasing. I wouldn't bet against Walmart. They've been a logistical powerhouse for a really long time. And they killed all small businesses in America. So but it's interesting to see Amazon now generates more revenue per quarter than Walmart does. So that was an interesting data point this quarter. Google's chart looks like complete ass. That's an outside week, and then 3 consecutive weeks lower. Monthly chart, that's a big ol', oh my god. That's a big ol' outside month. Huge. Oh, thank you for the subscription. 35 months in a row in this economy? Wow. Appreciate the subscription. But yeah, Google hit an all-time high earlier this month of 207 and 5 cents. It's currently trading at 170 and 50 cents. It has enveloped that range from the previous month. They actually reported a solid quarter. Oh my god, look at this. 47 months. 47 months. My god, RM Squires? 78 months? Hold on a second. That's wild. I didn't even know I've been doing this for 78 months. But thank you very much, RM Squires. You should go let the Discord know. I'm sure they're excited to celebrate this momentous occasion for Shacknews. But we appreciate 78 months, man. That's crazy. I can't imagine. That's just awesome. Thank you. Sorry, I just gave you an Elon Musk jump scare. Do I feel older? Yes. Yes, I do. I had my birthday this month. I'm 44 now. No, I don't feel older. It's just you don't think of things in months, right? I don't really think of things in months, Lucci. But when you like start thinking, it's like 78 months. That's a lot. That's a lot of months. But yeah, no, I do feel old. Yes, I do feel old. Most of the time. Anyway, so yeah, Google outside month, downside after a very good quarter. Also, like, what the hell is going on? With Google. Like, it's a simple question for the folks watching. And thanks everyone for tuning in here live. And folks watching on YouTube, we are live streaming this on Twitch, so like there's a more interactive experience if you watch it live. But I think the VODs are still pretty valuable because I call out price points and explain my logic for what's going on. But yeah, Google really does like to self-inflict pain. But at the same time, their results were great. So it's like, yeah, they did their whole return to office mandate. They're doing all sorts of stuff, but they've definitely screwed over their search results, right? We've seen websites going under because of their search results placement. We're seeing investors in websites and media companies making decisions because Google's algorithm has changed and it's affected their business. We saw Reddit stock crash earlier this month because apparently they changed something in the Google algorithm. So maybe it's time, guys. Maybe my time has come where I can short Reddit because we actually have a sell signal if it goes below this month, February's low. So this, I said it before, I was wrong about this stock. I didn't buy the IPO. I didn't like it at $38. So if I didn't like it at $38, I don't like it at $162 either. And their quarter was worse than expected because they claimed a change in the Google algorithm affected their traffic and their unique visitors. So, boy howdy, I'm sure anyone who runs a website can relate, but we also do not care if Reddit suffers at all. But yeah, so you would be buyer of this above the all-time high of $230 and 41 cents. And a seller of this stock below this month's low of 154.20. Yeah. Google has shown that they can inflict huge pain on users and they don't change browsing habits. Reddit saying they suffered is hilarious given they paid for the boost. They did get the... yeah. No, I know there's like a whole deal between Reddit and Google. And for Google to kind of undermine Reddit's search engine result placement, I find that funny. So maybe this isn't over yet, this whole internet thing. Maybe website admins should hold on to those websites. Or not, if you're Sports Illustrated, USA Today, or ESPN. I think those are 3 gaming verticals that shut down or are about to shut down. But I digress. Sorry, we're talking about Google here. I just thought it was interesting though. Google's decision, Google's actions are adversely impacting not just the publishing industry, but social media platforms like Reddit as well. But like I said, big ol' stinky outside month in Google. So you're a seller of it below 166.77 and a buyer above 207.05. And just another real quick question for the folks at home. How is it possible that Google is so far behind on AI when you compare it to like what happened with DeepSeek or what GPT's doing or what Anthropic's doing or Claude or like, I don't know, Facebook, even Grok? Like, is it really possible that Google sucks this much? Or do they have something... I want to think that's the case too, Tom, but like, is it possible that Google has something and they're afraid of it? Like, they're like, we can't ship this, it's dangerous, or it's like maybe they actually are acting in the best interest of their users by not releasing something? Because their Gemini bot is inferior to most of these other platforms right now. And I just find that surprising given, they've been invested in DeepMind and like another AI company for like over a decade. And I don't know if you remember, like it was like about 2 years ago, one of their engineers said that they had an AI chatbot that fell in love with them. yeah, I don't know. And yeah, Slinky, I'm glad you brought that up, man. You think about all the different data sets that Google has access to. The Google Maps database, uh, Gmail, YouTube, search, Google Images. Like, you look at, because what is AI if not just trained on data, right? Google has so much data. But like, what are they doing? It's very strange. And it makes me wonder if, like, they see what I see. Like, I don't think these chatbots are profitable. And Google makes like 85% of its money from search. So it's like, are they trying not to undermine their core business? Is that what's happening here? Because if they are, they're kind of seeding this next generation of search to these other companies. It's just weird. I find it all very weird what's going on with Google right now. And yeah, like to Scanner's point earlier, like they are, yeah, and maybe they don't value the generative AI stuff, but like I think this next wave of AI, and we'll talk about AI more later in the show, but I think the next wave of AI is like focused AI agents that do one thing or a few things very well. Instead of giving me this general purpose technology stuff, like I want something that's like, here's what I do. It's only this and I do it well. And right now, it seems like a lot of these are they're trying to replace Google search, or they're trying to replace like I don't know, Alexa or something. I don't know if like everyone went all in on these large language models, which I get it, it's important. Yeah, like automating, I know, like the suggested email responses and stuff, like all that stuff is somewhat useful, but like none of it is cause for me to go like, I'm gonna fire my entire staff of writers. You know, like that's not where we're at. And I think a lot of people thought that's where we were at last year. I you know, you can't do that. Like, I've said it for a long time. I There's this like existential moment for media right now, right? And I'm talking to some people who write for Shacknews right now who are in this chat. I don't think we've seen evidence that an outlet could go full AI writer and still have the level of quality that we have. And I agree, Slinky Jim, like, sure, give it 5 years, it'll get better at summarizing something. But is it actually able to report news? It's really good at stealing Shacknews articles and then summarizing it along with an IGN article and a GameSpot article and throwing it all in a paragraph. It's very good at re-reporting news. It's very good at taking something that someone already wrote and then writing it again in their own voice. They're very good at that. But I ask you, like chicken and the egg, what happens if all human media goes away? All writers stop writing news. All PR firms are gone. How does the news get written? And that's what I'm saying. Is like, for the last few years, it really seemed like everyone was like, we're gonna replace everything with AI. I'm gonna replace my writers on this TV show or on this movie. It's like, no, you can't. Like, writers can use AI as a tool to maybe get better at their jobs. But like, I know that Shacknews is working on stuff that AI can't do. It's incapable of doing. So like where we're investing right now, and we haven't launched it or anything yet, but like the things that we're working on behind the scenes, we're asking ourselves, what can games journalists do in 2025 that AI is not capable of doing, at least at the speed that we're doing it? It's like AI can definitely steal content and recreate it, but it's not very good at creating content without any kind, like you have to prompt it and then it has to have a knowledge base. So all I'm saying is like, without the knowledge base, these things are useless. And I think some people are getting to that moment where they're realizing that, including Microsoft, oddly enough. Anyway, Google, sorry, tangent. Google needs to just figure out what the hell they're doing. Stop giving 7s to 80% of the game, says Lucci. I mean, have you read my Madden 23 review? I called it best-selling monopolistic trash. I gave it a 3. But like, I'm just saying, there's we review bad games. We give bad scores to bad games, man. This is Madden NFL 23. Obviously, you wouldn't care about that review. All I'm saying is that, like, we're not afraid to tell a game it's bad when it's bad, but, 7 out of 10 is not a bad game. Maybe you're talking about the broader games media here. I don't know. Either way. Yeah, Google. You got a monthly outside bar. Pay attention. That weekly chart looks god-awful. So it's probably going to go lower. We had this nice little uptrend that had been going on for about 2 years. And we're kind of sitting right near it. It'd be interesting to watch this like 165 area if it can bounce. Anyway. So we talked about Apple. We talked about Google. We talked about Amazon. Meta. My God. This stock just keeps going higher. Except for the last 2 weeks. So yeah, that's looking a little more like the NASDAQ 100 chart. It hit an all-time high this month, came back inside the previous month's range. 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive quarters the stock has been up. That's wild. No, Meta, I'll say this about Facebook. I struggle calling them Meta. Meta spends a lot of money on Reality Labs, which is like their AR, VR. That's where Oculus went to die. And look, they're invested in it, and they keep iterating on their products. They don't make money on them at all. So it's kind of like the Xbox division at Microsoft, except Facebook's more transparent. They tell us how much they've made or lost in that division. I think Zuckerberg still thinks that AR and VR is a threat to Facebook and Instagram. So like, he wants to own that space because eventually there may be a like Oasis like place in Ready Player One that they could own. But he himself, I believe Mark Zuckerberg has been selling the stock. Facebook insider sales. I'm just pulling up the NASDAQ. Yeah. He had some options vest in the last few weeks. But Zuckerberg has sold just in February. He's sold several 100,000 shares of Facebook. So he's still raising cash. But he's not doing it as aggressively as we had seen in previous years. But basically, all of his options that vested in February, he turned around and sold those shares immediately. And, these CEOs get compensated in that stuff, so it's not unusual to see it. But I don't think he thinks his stock is worth where it is right now. And a lot of these stocks are trading at a premium because they're in the AI space, right? So in the case of Facebook, they're using an open model for, I believe they call it Llama, their large language model. I think they said they're going to ship a competitor app to Grok and to ChatGPT here in the next few quarters. I think Facebook's doing some interesting stuff. Like, I do think that they make the best VR headset pound for pound, dollar for dollar, with like the Quest line of products. I think Beat Saber was a great acquisition on their part. They have good taste in VR games. I don't think the VR games make them any money, but the Batman game that they paid for the exclusive for was quite good. It won our VR game of the year. But here's my hot take on Facebook. And Facebook's more innovative than Apple. They just are. Their AR glasses that they're working on, those Ray-Bans, the spit in your eye is all I know. Huh? I don't know. I guess it's very odd to me. I've seen VR die twice in my lifetime. I don't think you've seen VR die, man. I just think it's a niche. Like everyone, the investors in that space want to claim that the addressable market globally is billions of people, when in reality it might be 5 to 10 million people globally who can afford VR and want to use it. And like I think there's more people interested in VR than there are people who want to actually buy their product. And that's the problem. But they sell it at a loss. When you sell your headset at a loss, yeah, they actually, I think they do call it llama. I can't remember why they do, but yeah, it's called llama. But yeah, like I think Facebook is closer to shipping like a glasses based AR device that's not garbage like the Vision Pro. So yeah, I kind of mentioned how I was going to rank these companies. They're called the Magnificent Seven. So I'm kind of hinting that I think Meta might be a better stock than Apple, which is. Bleh. Let's talk about Microsoft. Microsoft out here just killing their own trends, saying, "Hey, we might not." The CFO 2 quarters ago said that it might take. Oh my God, dude, Slinky Jim. I forget Microsoft here. Slinky Jim in the chat said, "I'd rather have holograms, but real ones." Dude, speaking to me specifically, I completely agree. I don't want to wear anything on my face. I don't want to wear screens 2 inches from my eyes. I want projection of holograms. I want like a mat or like a cube or something that's you place on your table and it's a holographic projector. But here's what I think's going on in that space. I pay very close attention to that space. It's insanely expensive. And they just can't, like, they have to make a consumer product that leads us to it so that those, when we do get the holographic projector, it's not $30,000 or $50,000. Maybe it's $3,000 or $5,000 or $10,000. Like, I feel like it's going to be like plasma TVs when it does come out. Like, I don't know if you remember plasma TVs in the early 2000s or late 90s. They were like $50,000 for a plasma screen TV. And it's like, I don't think any company is going to ship like a real holographic projector that would appeal to consumers. But my God, do I agree, man. That would be way better than wearing glasses that mimic holographics. I completely agree with you. But in the interim, we're stuck with Facebook and Apple and Google and Valve and Magic Leap and Pico VR and all these different companies. HTC, everyone's trying. They all want to have it be a screen. They want it to be a translucent screen or glass-like. Yeah, some sort of transparent hybrid kind of screen. But then with that form factor, with like the glasses form factor, you run the risk of battery issues. And I've always said this, like, I don't want to strap lithium ion to my head or my face, and that's where I think they miss on a lot of this stuff. The way I look at it is like these glasses devices, it's almost going to be like the Apple Watch, right? It's going to be like part of the ecosystem, but the processing should still happen on the phone, in my opinion. It's like let the glasses be as light as possible. But all I'm saying is like Facebook's actually iterating on that space. Meanwhile, Microsoft just gave up on the HoloLens project. Palmer Luckey, the founder of Oculus, he actually just won a $22 billion head-mounted display contract from the U.S. military that was part of the HoloLens project. Microsoft has essentially given up on HoloLens, which is fine. HoloLens was shit anyway. But I like to see these companies at least trying to make something cool. But I completely agree with you, man. Holograms, that's the future I want. But yeah, Microsoft, you had an inside quarter and down signal. So below 405.57, we have an active sell signal on the Microsoft chart, and it's valid all the way through the end of March. So those are your levels to pay attention to there. And obviously, like I said, if you were to short it below 405.57, it's actually trading below that right now. That would be your stop, where you know that, okay, it's going back within the previous range. Let's get out of this. Um, Satya Nadella like literally came out and kneecapped his own company. He's like, we don't know if we're gonna be profitable on AI for a long time. Um, I love the idea of holograms. Is something I've been, as like a kid, it's something I've been fascinated by. But like now that we're like in this weird future, I really do appreciate holographics, and I'm interested in that space. Uh, like when I do see them at like CES, and yeah, like being able to interact with them so that there's some sort of 3D sensor, right? Or maybe it's like maybe that's the wearable part of it. Is it, you know, Apple did some really cool finger and hand tracking, and Oculus is too. So maybe that stuff could be part of a wearable device that we use with a holographic projector. There's a lot of questions, but like, I'm with you. I think it's going to be, that's going to be a transformative moment when like someone actually ships a viable consumer holographic projector. And like what that'll do to entertainment, what that'll do to gaming, what that will do. Like I think we've seen the beginnings of these ideas in VR with these like tabletop kind of demos of what like a interactable 3D game would be. But yeah, I think what was it, Star Wars? Yeah, that would be the product that kills off Game Workshop. But Games Workshop, maybe they just get into it and start making holographic pieces that you could buy. And then they figure out some way to paint in holographic imagery. Say, like, with these moments that you have to change your business model come opportunities. But I just don't think we're there. I think the costs of holographics are what's keeping that from happening. But yeah, on the monthly chart, we've had a rev strat to the downside. That's still in place, and like I said on the quarter, it's inside year still. But yeah, you have a stock that's down on the year, down on the quarter, down on the month, down on the week, up on the day. Yeah, Star Wars chess. Yeah, I would be all about that. But yeah, anyway, Microsoft, like, it's trying to find a bottom here, and you'll find that the next company I mentioned is also kind of in that boat. Nvidia. What a horrible week for Nvidia. Wow. It's been rough chuckles for Nvidia shareholders this year. We did hit an all-time high. Full disclosure, I do own shares of Nvidia in one of my accounts I manage. I own shares of Apple in some accounts that I manage at much lower prices. But yeah, of the stocks that I just mentioned, full disclosure, I do own some of these. But yeah, I didn't buy any Nvidia this week because I'm not a hero. I'm not trying to be a hero. We have an outside quarter. So last quarter the high was 152.89. We hit 153.13, so just barely hit a new high in Nvidia during the quarter. And then we just took out the low yesterday. So it's an outside bar, but we have another month for this to form, so we don't really know what to look at there. The monthly chart, it's actually green on the month, based on today's rally, basically. But it's still down from the all-time high that it reached in January. This is a good question. Actually, yeah, you know what? Scanner asks, do you think the seemingly legitimate bad product problem of the 50 series is going to do anything to them? Seems like the AI earnings will just swallow any possible change. We reported on their gaming revenue for the full year, and it was something like $11 billion, which is a lot of money. Huge. They made something like $150 billion in revenue, or maybe 115, sorry. Over $100 billion in sales for the year. 11 billion of that was from gaming. So do a couple of angry nerds who are mad about the ROPs in their GPUs affect their share price at all? No. And what's weird is if that same thing happened 10, 15 years ago, Nvidia's stock would have crashed 20% because it used to be 60% gaming, right? Now it's less than 10% of the revenue comes from gaming. So, and that kind of speaks to why the shoddy production of the 50 series has happened. So to answer your question, I do think AI earnings can mitigate that damage. Yeah, there is no viable competitor to Nvidia right now either. So they can get away with shoddy product launches. It's not the first time we've seen a bad product launch for a GPU from Nvidia, and then they find a way to blame their partners or whoever else. But yeah, there's a very good Gamers Nexus video on the Nvidia situation. I would recommend people watch. But yeah, like what's gonna what's gonna get them to change is really a great question. Oh yeah, did they announce their price points for the Radeon stuff, right? Yeah, I didn't even mention them. You guys want to see you guys want to see a dead body? Yeah, that's AMD. Stock hit 227 and 30 cents back in March of last year. It's currently sitting at $100. Now, that looks terrible, but I'm obviously just showing you context of this is what it's done since the all-time high. Now, let's zoom out. This stock was freaking $2. It was $1.86 in 2009. And now it's at 100. So, frame of reference, right? Where did you get in? Where did you get out? But they are executing extremely poorly. Their margins seem to have peaked, and Nvidia is eating their lunch in the AI server race, right? So like Nvidia, like you're saying, AMD is trying to keep up with the 5070. It's like they're trying to keep up with the Hopper and the H100, and now Nvidia is already shipping Blackwell and H200s, and like by the time AMD catches up to Blackwell, Nvidia is probably gonna be 2 generations ahead of them again. So it is this tortoise in the hare moment. And I don't know, Intel's just like a bag of poop on the side of the road. But yeah, oh wow, it's actually below $100 in after hours right now. I do think there's a price point at which AMD does become interesting though, because they're like the Avis of semiconductors, at least GPUs. But yeah, we were talking about Nvidia. Nvidia's quarter was solid, and they guided for $43 billion in sales. So they're still the fastest growing company that I follow. I think they grew revenue around 70% year over year. That's pretty bananas. Their gross margins were 73% too during the quarter, which is also crazy. That means 73 cents of every dollar of revenue is profit. That's bananas, especially for a hardware company, especially for a chip company. But it just shows you that they claim that they still have a lot of demand for their AI chips. So you either believe Jensen Huang or you don't. Lastly, because I wanted to talk about what Jim Cramer calls the Magnificent Seven. This is the most puzzling stock chart. This is Tesla. Tesla stock went from $246 to $486. It did that in November and December of last year, not because the stock had any good news. It did it because Donald Trump won and Elon Musk bought the election for him. So the stock's been trading basically on, it's like almost like an approval rating for Elon Musk. And basically since he did his little gesture at the inauguration festivities, stock's been going down precipitously. It's fallen from 480 to as low as 273 this week. This is not a stock that's trading inside anything, but you do have an inside month and down. This is a perfect illustration of what an inside month and down can do for you. So you trade the January range was 373.04 to 439.74. It broke down below that 373, and it hasn't looked back. This stock is down almost $100 on that sell signal. So you could have made some decent money on the short side. It's still inside quarter because, like I said, these ranges are pretty crazy. It's trading inside year, which I wouldn't surprise me if it just stays inside year, because last year's range was 138.80 to 488, and we're kind of right dead center right now. I guess what I'm getting at is that this is probably dead money at best. Nothing on the weekly chart. It was green on the day. But a lot of stocks were. A lot of beaten down stocks had a rally kind of after the... you can see it in almost every chart today. Here's the Zelensky shit show in the Oval Office. This is everyone reacting to it between 1 p.m. and 3 p.m. And then everyone's like, I guess we're not having World War III, and the market rallied into the close. So it's back at 292. I was looking at the chart earlier. I was talking to one of my friends about Tesla. Like, if you believe that this uptrend is still intact, there's a chance that this stock bottoms here, like around 260. But I don't know. That's a good question. Scanner asks, given people seem to be switching off of Tesla as a brand, who actually benefits? BYD in most countries. I don't know if BYD is sold over there in the UK, but BYD is the largest Chinese EV maker. I think they benefit. I want to say Rivian would benefit, but so far they haven't. They're guiding for a down year. So I don't think Rivian should benefit. I don't think the U.S. automakers benefit because their EVs kind of suck. GM has been like half committed to this. Ford makes some okay ones. Maybe Hyundai? Yeah, I think Hyundai could actually make some noise in the space. Honda and Nissan are trying to merge, but Nissan doesn't want to do it now, so that they could have been a competitor. Toyota's years behind everyone in getting into the EV space. BMW makes one. They make the whole i series, like the i3, the i8. They're okay. Mercedes makes a couple of EVs. That's a really good question. Who stands to benefit? I'll tell you who would have benefited if they actually did what the rumors said they were going to do. Apple. If Apple had an EV out right now, they would be eating Tesla's lunch. And I think it's a shame that whatever project they were working on at Apple, they canned for the 8,000th time. But yeah, I guess Hyundai. Sure. But I think the problem is like the scale at which Musk can produce batteries and cars and drivetrains. There's no one that can compete in outside of BYD. But I think like if it's true that no one will ever buy a Tesla vehicle again, I think Tesla's future depends on them being a supplier of lithium-ion cells and also maybe their driverless technology down the road. So that maybe they become like a Borg Warner or like a supply company to other EV makers. They do have the supercharger network, which is the most robust charging network in the world. So that like I think there's value at the company. I agree that no one's gonna want to buy a car unless you like Elon Musk right now. I guess a catalyst to the upside would be Elon either dying or stepping down as CEO. So, one of those things could happen, I guess. But yeah, I see no reason to own this stock here. And yeah, like I said, on the monthly chart, there is a sell signal. Quarterly chart, we got an inside bar, so that's going to be something we watch going into the end of March. But no signal there yet. But you do have a sell signal on the monthly chart. Well, you did. So February, there was a sell signal. Now, if it breaks down below the low of February, this 273.60, then you could have some continuation to the downside. And then you can start to see if it's going to revisit some of these lows from the last few years. Yeah, like, I'm not saying, hey, let's all kill every CEO, but I'm just saying that I think Tesla stock would benefit from him leaving or not being CEO anymore. Yeah, so that's the Magnificent Seven. And Tesla's no longer a $1 trillion company. So yeah, let's rank them. I'll start from worst to best. I'm going to say Tesla's the worst. That's going to be number 7 for me, is Tesla. I think the Cybertruck is a disaster. And the CEO is way too distracted. And kind of hated by... Like, the people who buy electric vehicles are not right-wing idiots. They are people who care about the environment, or they're people who've done the math and are like, hey, I could save some money if I don't use gas. So I think there's a group of people who would be buying these cars that are now completely boycotting the company. So I would say that classifies them for worst of these 7 companies. Next up, I'm going to say Apple. I don't understand Apple's valuation here. I don't think Apple makes any sense here. But, first of all, let me give you some tech. I gave you a more of a brand analysis of Tesla and why I would stay away from it right now. But statistically, its trailing PE ratio is 138. Its forward PE is 95. It's trading at 4 times its growth rate long term. 12 times book value, 10 times sales, and sales aren't really growing that fast this year. So it's very expensive based on 2025 expectations. And it's currently valued at around $900 billion. Apple, by comparison, might look cheaper. Trailing PE of 37, forward PE of 32, but they're barely growing. And their largest revenue segment, iPhone, is actually declining year over year. So I don't know why you would pay 9 times sales, 53 times book value, 30 times earnings with a 2-peg ratio for a company like Apple right now. I just don't think Apple's innovating anymore. I think they're a Me Too company. They made a VR headset 10 years late. They made a Netflix competitor 10 years late. They invested in gaming 10 years late, and they're coasting on the laurels of Steve Jobs' ideas. Tim Cook is not an idea man, and whoever greenlit Apple Vision Pro should be ashamed of themselves. Apple Intelligence is quite possibly the dumbest AI out of all these companies. I will say that, the other thing about Tesla I'll mention, I think that the next trend that they'll be a part of that actually will be investable is the robotics division of their company. I don't sleep on their robot division. Yeah, Apple has their own standards now, and they just kind of refresh them. It's thinner, cheaper, sometimes more battery, sometimes more processing power. And look, I love my MacBook. It's the best computer I bought in years. I use an iPhone. I think it's still one of the best products you can buy out there. Remove a port, add a port back later. Yeah, they're doing that incremental stuff. But yeah, I would just stay the hell away from Apple right here. I think it's... If the stock market goes higher, Apple will go higher because it's part of everything. It's in all of your retirement accounts, even if you don't own the individual stock. It's in every Vanguard growth fund and all those things. And it's in the S&P 500. It's in the Dow Jones. It's in the NASDAQ 100. It's everywhere. I have one last target on this stock. It's $323 a share. That's basically me applying a 50 PE ratio to the forward numbers, I think. But that would be it. I don't understand. The stock has gone up on the expectations of a vehicle. Then the vehicle doesn't happen, but the stock doesn't sell off. Then the stock went up on the release of the Apple Vision Pro, which was a complete dud, and the stock doesn't give back those gains. Then the stock goes up on the expectations of Apple getting into the AI space, and it sucks, and the stock doesn't go down. I feel like I'm taking crazy pills sometimes. But yeah, it's like at some point chickens come home to roost for Apple. And these buybacks and these dividends, which like I'm writing a feature for Shacknews where I'm going to try to calculate the cumulative amount of dividends and buybacks that Apple has done since the death of Steve Jobs. And it's like probably over $500 billion at this point. For what? Think what they could have done with that money. They could have acquired companies in different spaces that could have grown. They could have bought, they could still buy Rivian. Just buy Rivian. Rivian's problem is they don't have enough cash. Apple has too much cash. Like, buy Rivian. Slap an Apple logo on the Rivian. Watch Tesla die. Like, a more competitive Apple would not have given up on the EV space. That's all I'm saying. And it's like, what is their next product? Because so far, what is this company? It makes Macs still. They have the Apple Services division now, which is like obscenely priced iCloud. I don't know if I wouldn't call Tim Apple a loser, man, because like Tim Apple took over the company here, dude. The stock was at $11.67 when Steve Jobs died. And it's at 242, so I would not call him a loser. He's made a lot of money for a lot of people, but I don't think he's not a product guy. He's an operator. He was the chief operating officer under Jobs. He's the guy who manages inventory. He's like a logistics master. But none of that makes you good at thinking about product. And that was the thing I always worried about when Tim was made CEO, was that like they were going to have the Steve Jobs runway, and then what? I think we're entering the and then what phase of Apple. And I'm not saying oh, Apple's doomed. I'm saying Apple's doomed to have a lost decade like what Microsoft did from the year 2000 to the year 2010. The stock did absolutely nothing for 10 years. And that was under Steve Ballmer. And then the minute that Steve Ballmer stepped down, you started to see Microsoft return to actually being a good company. And I'm not saying Tim Cook needs to step down. I'm saying Apple needs a product guy. Like my Band-Aid for the situation? No. I don't think you bring back Johnny Ive. My Band-Aid for the situation is even crazier. Bring back Steve Wozniak. I said it. He's ancient. But, like, let Steve Wozniak, like, come back to Apple. Give him his own, like, Windows NT-like division. Here's $1 billion, Woz. Just make something cool. I'm just saying, like, that would be cool. Like, you want to really excite Apple fans? You want to excite nerds, period? You bring Woz in. He is the least problematic. He's a good person. And he, like, there's a track record of that. Like, Woz sold shares in the IPO of Apple to employees because Steve Jobs was hosing them. And Woz distributed shares of Apple pre-IPO to people at the company because Jobs was already fucking them over. So, yeah, like, I love Steve Wozniak. I know he's old, but he's still one of the most brilliant engineers we've ever seen in the history of the world. And for him to just for Tim Cook not to invite him to the company and just be like, hey, dude, we want you here. We want you on stage. We want you talking about our products. We want you to make something. Because, like, this company doesn't exist without this guy. And so many other things don't exist. I would like to see Woz. I just think that'd be an interesting move. But, yeah, so I'm going to say Apple's number 6 on my list. Number 5, I think I'm putting Google there. Until I have evidence that Google knows what they're doing, like, until I know evidence that Google is actually doing something intelligent, I can't buy the stock. And I don't have any faith in it. So yeah, I'm going to put them at 5. The thing about Google is it's not that expensive of a company, honestly. You're talking now market cap, sure it is, but like from a price to earnings basis, it's definitely cheaper than the last two. Yeah, it's trading at 19 times forward earnings. That's not that crazy. 6 times sales, 1.2 times growth. It's a $2 trillion company. That's huge, but it's less expensive than Apple on every single metric. It's less expensive than Tesla on every single metric. And like there's a chance that they have something behind the curtain there that's actually good at Google with respects to AI or other technologies. I also just think YouTube is a great business. Like YouTube is awesome. That's the best acquisition they ever made. They bought YouTube for like $1 billion or $2 billion, and they make like 8 or 9 billion in revenue off of it each quarter now. One of the best acquisitions of all time. But yeah, I'm gonna put Google at 5. So what would be 4? I'm gonna say Microsoft 4. Microsoft has some things going for it, but then they're also Microsoft, and they just love to ruin things. I don't know if you saw the news today. They killed Skype, or Skype's about to die. Sorry, Lucci. I don't know how you're gonna be calling your girlfriends in America now. They're taking Skype away from you on May. I think sometime in May. Yeah, it's I don't know. I'm let me pull up some financials on Microsoft real quick. But yeah, I think Microsoft's in a good place. They obviously have a monopoly on PC operating systems. They have a lot of money. They're really good at acquiring and ruining companies. We're seeing it happen at Activision Blizzard right now. And they're already well on their way in destroying other game studios. Yeah, Microsoft trades at 30 times earnings. Actually, you know what? Oh, man. I kind of want to flip Google and Microsoft, but Google's really executing poorly. I'll stick... Microsoft's still 4. We'll keep Microsoft at 4. It's trading at 30 times forward earnings, 11 times sales, 2 PEG ratio. None of those metrics are cheap. I guess is my only point. Like, I'll add an addendum to the end of this once I finish the list. Okay, so number 3... So I already did Apple. What am I missing? Google, Microsoft. So I should be writing this down. What am I doing? So Apple, Apple, Tesla, Apple, Google, Microsoft. Okay. Sorry, I'm writing it down. Okay, so who's slightly better than Microsoft, but still a company I don't really like? It's between Meta and Amazon. I'm just not sure. Let me take a look at both. Meta is trading at 25 times forward earnings, PEG ratio 1.3, 10 times sales, 1.6 trillion valuation. Amazon historically has always traded at a higher PE. 31 times forward earnings, 1.7 times growth, 3.5 times sales, 2.2 trillion. Uh-oh. Sorry. My computer made some noise. I'll put Amazon. We're going to put Amazon on the list next. So Tesla's number 7, Apple's number 6, Google's number 5, Microsoft's number 4, Amazon's number 3. That means Meta is number 2. What a strange world we live in that I actually think Meta is one of the better stocks in this universe, but here we are. Have you seen their ads? I don't mean Meta ads. I mean like Instagram's ads. They're the most, I don't know, crazy. So let's So that means I have the number one. I have the number one. But yeah, let's look at the fundamentals of Meta before we move on. Meta is trading for 25 times forward earnings. 10 times sales. None of these companies are cheap. That's the bad news, guys. And then last but not least, Nvidia. Nvidia is the cheapest of these. Nvidia is the only one I own. I shouldn't say that. I own Apple, but at much lower prices. I'm not telling people to buy Apple here. But yeah, they just reported earnings this week. They're growing revenue at like 70%. And that's on the back of triple-digit revenue growth last year. So they're growing like really fast. Trades at 28 times earnings, but that's lower than their PEG ratio is less than 1. That means they're trading at a discount to their growth rate. The lower that number goes, the PEG ratio, the more interested I am in buying the stock. And I think some people started dipping their toe in it at the end of the day today. But I'm going to keep an eye on it. I bought it like below 100 a share, split adjusted or whatever. But I am interested in adding to it, because I think that all roads in the AI space still lead to NVIDIA. All the other companies I mentioned are all customers of NVIDIA in some way or another. Not Apple as much. But Google, Microsoft, Facebook, Amazon, Tesla, they all buy those H100s and those AI arrays. So yeah, NVIDIA would be my number one. So there you go. If you want me to, I can run down them real quick for you. I have ranked the Magnificent Seven, I believe is what Jim Cramer calls them. So, at number 7, you know what? Maybe I should do the full screen video for this. Right? Number 7, Tesla. Number 6, Apple. Number 5, Google. Number 4, Microsoft. Number 3, Amazon. Number 2, Meta Facebook. And the number 1 company in the Magnificent 7, the only one that I would recommend people buying, is NVIDIA, because all roads lead to NVIDIA. There you go. But yeah, those are your rankings on those stocks. I don't know. We want to look at any other individual stocks before I get out of here. I mentioned Rivian earlier. Rivian reported, I don't know, was it this week or last week? I think it was last week. Things are not going great for them. They actually guided for a down year. I think the situation at Rivian is that they can't make cars at a profit, so why try to make more cars? You're just going to guarantee you're going to lose more money. So I think, good one, Netflix. I'll take a look at Netflix here in a second. Netflix is killing it, man. That is a chart. My God, is that a chart? Quarterly chart did not stay inside, but hit an all-time high. Did not stay inside year. Did not stay inside month either. But we do have a potential shooter to the downside now. It got above 1,000 only to close the month back underneath it. So I guess you just watch the low of the month, 955, for a sell signal. But they're just winning. Yeah, they don't need to make high budget shows. They can also just do a deal with WWE, or they did that NFL broadcast that went over very well. They're just winning, man. They just win. Like, they win. I don't know what else to say. They win. That's a chart of a winner. But I am not telling people to buy it here. Let's see. Some other video game stocks. Maybe we should look at GameStop while we're here. Not a whole lot going on. I just want to show this to the GameStop people. Inside year. So everyone's like, oh, it's going to moon. Yeah, it might just sit here for a year and do nothing. And the CEO of GameStop is an idiot who is trying to sell GameStop Canada and their France. I think it's called Micromania. They're France-based retailer. But yeah, it's inside year. Stay away from it. Oh, like Slinky, you're talking about like Squid Game 2 for sure. They also have they did shut down every store in Ireland. I do remember that. GameStop sucks. They also shut down Game Informer. I emailed them trying to buy Game Informer for $50. They did not get back to me. But, you know, I'll email them again next week. Maybe I'll offer $55. Yeah. Stock I just want to draw everyone's attention to. Corsair might not be dead. This has been a rough existence for Corsair shareholders. You had the IPO at around $14, shot all the way up to $50, and then began a downward spiral. It bottomed last year around $6 a share. It's currently at $11.30. It's not that cheap. I'm sorry. It's not that expensive. And I like Corsair products. I think they make good stuff. And they own some good brands. They own the Elgato. Yeah, I think they're interesting to watch. $1.2 billion company. And it's trading at a discount to sales. So they make more in sales than they do their market cap. This profitability is the issue. So we'll have to keep an eye on it. Before I go, you should do a show just about esports companies sometime. No. Yeah, so I'm like, you really want me to do that, man? Let me see if I can do some quick. Let me see if I can find some. Just very quickly. Let me see if I can find something that applies to this situation. Hold on a second. See if I can find something that explains my feelings on the esports world. Oh, come on. Does this thing not loop? Okay, it does loop. There you go. Yep. This is what I think of esports companies. Hey guys, you want to buy an Overwatch League team? Only $50 million. People spent $50 million on esports teams. Like Activision tricked people into spending $50 million for an esports team. I don't know. Yeah. It was Bobby Kotick probably. And he did make out like a bandit. Look, I mean, I know I'm making fun of esports here, but this is like also a live look at the profitability of games media right now. Like it's a tough time in our industry, man, kind of across the board. Developers are going through it with layoffs, and it doesn't seem like they can even make. I don't know if it's possible to be successful enough to keep your job in some spaces. You saw what happened with the Marvel Rivals game director and everyone in Seattle. Everything that's going on with NetEase. $5 million for a Heroes of the Storm spot. That's insane. Yeah, it was $25 million for the original Overwatch League teams, but then the second wave was $50 million, which is categorically insane. But I want to say this, because like I love esports. I'm not a hater of esports at all. I love watching it, and I love what it means for the people. Esports are great for the players, right? That's the real story, and that's the upward mobility that has been created by esports. So like, I think it's communities that benefit from esports more than corporations do. But like you will see like Chipotle sponsors Evo now, and like Sony bought Evo. We don't know about the profitability of these companies when they get acquired, but I think there's esports needs to continue to exist. Yeah, it's like companies came in and were like, we can do this. And it's like, yeah, maybe you can't. Maybe grassroots was the way things should be in some of these esports. Mm-hmm. And that's the problem there, TJ, because if you're not able to make a living off of being an esports competitor, eventually you're going to stop playing the game. And but I think what we've seen, TJ, is maybe they don't make the maybe they don't make the money as the esports competitor, TJ, but they make it from being a content creator or by getting sponsored, there's these other elements of it. But that other side, the people making the payouts, the people sponsoring the teams, are those companies profitable or sustainable? And I have not seen anyone say yes to that. And right now, if you're looking at the Smash or the FGC, Luminosity Gaming is just bringing everyone onto their roster. And it's okay, but where are you going to be a year from now or 2 years from now? Are you even going to make it to the next Smash game? Because they have a lot of platform fighter players on their roster right now. But yeah, the profitability of esports is dubious at best. As someone who has planned them, I've held esports events, obviously the Shacknews style of them, but we've done Quake tournaments, we've done the Shacknews World Championships at E3. The economics of esports are not favorable to the tournament organizer, really ever. Yeah, but I love esports, and I still think we get magical moments like Hayao at Evo last year, or even Hungry Box winning at Genesis just a couple weeks ago. So as a fan, I still love esports, but I think that it was one of those things where they were trying to sell us something that wasn't there. And I never liked watching Overwatch League. It was the most boring. I didn't get it. It was chaotic and boring at the same time. And I just didn't enjoy it. But I obviously love watching Quake competitive play. I love watching. We sent Ozzy to the Apex Legends Championship. I thought that was great. Apex is actually really fun to watch. Counter-Strike from time to time can be enjoyable. Fortnite at times. But really the things that I focus on are Rocket League and fighting games, and I think those are some of my favorite. If you like MOBAs, League of Legends has kind of taken the lead over Dota 2, in my opinion. What they've done to the international the last few years has been really disappointing, because they went from massive prize pools to barely competing with some other stuff. But I would like to see more money come into the prize pools. But I don't know any company that's we're making a ton of money off this esports thing. I don't know any organizer that's ever said that. They're just happy when they break even or make enough to do the next one, right? Which is a very similar philosophy to how ravers think when we're throwing parties. So yeah, I don't know. I love the esports scene. I think it'll always exist because grassroots esports are better, and we're gonna continue to see that. Cool. Well, I don't know. Anyone have any other stocks they want me to look at? I'm going to probably wrap up the stream here. I do want to point out Market Bellwether, Denny's. It's really in trouble, you guys. I don't think Denny's is going to make it. Also, Hooters closed, or Hooters is going bankrupt. And Joann Fabrics also filed for bankruptcy. So yeah, some very recognizable brands they're falling under tough times, and yeah, I think Denny's is probably going to go bankrupt. Just an update, because this might be the turdiest turd to ever turd. GoPro stock is trading at 76 cents per share. I don't know if it's worth buying here either. OnlyFans, yeah, Hooters restaurant is closing, Joann Fabrics is closing, and GoPro is trading for 76 cents per share. Yes, all those things are true. I got it. You said really. You said really, but you said really. Yeah, so people ask me like what are the stocks that I'm watching? I'm watching GoPro. I own some shares. I'm down on them. I'm watching Ubisoft because look at this chart. Like we're definitely closer to the bottom than the high. I just don't have any faith in their ability to execute. So if Assassin's Creed doesn't launch well, yeah. Yeah, Ubisoft did crash out so hard. Jan? Jan? I'm not Jan. Do I look like Jan? Yikes. No offense to Jan. He's a very handsome man, but he's like blonde and tall and Canadian. And I am none of those. I'm tall. I'm not blonde. I don't think so. Yeah, no. But yeah, I'm watching Ubisoft, and every day I'm just like, no. I'm like, should I buy Ubisoft? Answer, no. So I'm just kind of in a wait and see mode there. Stock is cheap, but it's cheap for a reason, and I'm staying away for that reason. We should just pay attention to Take-Two. Yeah. Yeah, Denny, this Ubisoft stock. Woof. Just rough times at Ubisoft. But Rayman is sad. You know what? Like, that's the thing, man. No, I'm not buying more Nintendo here. Oh, you know what? What am I doing? How am I not talking to you about Nintendo before I end this show? Let's talk Nintendo. My existential crisis. You guys all can join me in my anxiety. You want to know what's keeping me up at night? Having too much invested in one company. Something I would not recommend anyone do. But, you know, when you have conviction like me, sometimes you make stupid ideas. And you buy Nintendo, and you hold it for 10 years, and you make 600% on your money. Now what? Just ridiculous quarter. Still going up on the quarter. We were up 13% in February. We were up 11% in January. This stock is schmoovin'. Switch 2 launch is, we don't know when, but we know that the next date, the important date that we're all waiting for, is April 2nd, 2025. Not because that's when Trump's going to escalate the trade war. It's because that's when the Switch 2 Direct happens. So yeah. But this stock it's running ahead of it, RMS, and that's what concerns me. It's like, it's definitely pricing some of the future into the stock already. And I worry that event could be a sell on the news event. They do have some easy comparisons year over year because this was the last year of the Switch, and now this is gonna be the first year of a new product. So yeah, I'm not gonna give anyone a recommendation on to buy or sell it here until we get further information. But I'll just tell you that the chart is the best looking chart out of any stock that I follow. Maybe Netflix. Netflix and Nintendo have very, very good looking charts. Hitting all-time highs. They hit them this month. There's a lot of momentum. And jaboofers out there are going to be like, oh, Switch 2's coming out. I should buy the stock. And then that might be the moment that I'm selling my shares to the jaboofers. But yeah. I think that'll do it for today's show. My DoorDash has arrived. I did like one of those scheduled deliveries. You guys ever do that? I was like, I'm smart. I'm like, I'm going to like work smarter today. And yeah, my food's outside, so let's go get it. I'll do it for today's show. I don't know. If anyone has, before I go, buy shares in lunch. Yeah, for sure. Before I go, why don't we try out Bubbletron for the day? This might be a disaster in the making. I am Bubbletron. Yep, there he is. I haven't come through the speaker. Buy shares in lunch. Maybe. Okay, let's see.
Ohio-based smartphone for millennials, fungible, gummies, ditch digger, bite-sized, film script, AI agent, conservative media outlet, mRNA vaccine, movie theater, Web3, apparel company, software as a service sales service, soy, metaverse, cover band, premium, bidet, large language model, carbonated, power glove, LAN party.
I ordered big ass salad, Lucci. It's like a chicken salad that I get. Um so yeah, we got Bubbletron here. I kind of end these streams with just like a quick round of Bubbletron.
Conservative media outlet.
I got the audio bleeding through my mic probably.
Apparel company. Movie theater.
I'm going for the low valuation.
Calculating. Conservative media outlet. Apparel company. Movie theater.
Nailed it on the first try. Sorry. I'll let you guys figure out the high valuation of the day. But yeah, first try, got low valuation. And yeah, if you missed the update that we announced on the 31st, when you get a parameter right, it'll show you the corresponding emoji next to it. So if I didn't get all three of them, like it'll say I got 2 out of 3, it would have still given me the other 2. So I think that's been a nice quality of life update for the game. And then obviously we added all these voice samples. So yeah.
I am Bubbletron.
That's Bubbletron. It's free to play. Bubbletron.com. Check it out. And yeah, before I go, I always like to tell people to manage their risk. We are in increasingly scary times. The president is literally a volatility incarnate. Elon Musk is running press conferences out of the cabinet meetings and going on Joe Rogan and talking about nonsense. And I expect more volatility to be in this market. You know what? Let's look at the volatility index before I go. It's actually probably a good way to end this. Yeah, this is the yearly chart, but on the month, we have an inside month brewing in the volatility index. So at some point, equilibrium is going to be broken, and it looks like it might be to the upside. So the level to watch on the VIX, the volatility index, is the high of February, which was 2240. That occurred this week. That occurred today. So a break above 2240 on the VIX, I think we could see it get really out of control. And that would be a monthly signal. So that, you know how it's like, hey, there's some inside signals on the Dow and on the NASDAQ or, these other individual stocks. This is the thing to watch, though, because the VIX is what's pricing in risk. So if we're talking about managing risk, you better be watching this instrument because this is what determines the price of options on the S&P 500. The cost of buying insurance, the cost of buying call options. So yeah, as always, Ohio-based metaverse cover band venture valued at 16.9 million. Love it. Love to see it, Axe. Thank you for playing. It's a free game. I think it's actually gotten pretty fun. We got a leaderboard going on there. I've enjoyed. It's our first game. I really enjoyed making it, and doing all the vocal samples for it. And I even made the song, the calculating song. So that is definitely my baby over there. But yeah, if you want to check out Bubbletron, it's free to play. We have Shack Pets over there on the App Store still. If you want to engage with the cutest animal feed, it's the latest pets. We actually added like a story-like feature to it, so you can, if you're buddies with anyone on Shack Pets, you can see all their pictures very quickly. So in these times where you might want a distraction from every other doom scrolling feed that you have, Shack Pets is a nice little place to go. But I'll do it. As always, manage your risk. Thank you for watching. We will be back on Monday, March 31st. Yeah. Thank you for watching. And yeah, if you missed this, if you missed the beginning, I will be uploading the VOD to YouTube shortly. So thank you all for tuning in. We'll see you next time. And as always, do it for Shacknews. Oh yeah.